Hello everyone, welcome back. This is Jeff from Mysteel's iron ore department here to give you the latest on China's ferrous market. Let's dive in. China's ferrous market remained range-bound and relatively weak over the past week, primarily due to the ongoing off-peak season for downstream sectors. Despite various market rumors related to environmental restrictions around the National Military Parade, there have been limited production cuts so far, heightening market concerns around steel fundamental performance during this time. This, combined with the cooling of speculative sentiment in the coking coal and coke markets, as well as the United States' announcement to expand steel and aluminum tariffs, has weighed on domestic bearish prices. However, recent released customs data showed strong performance in steel and exports, especially for billet, resulting in some positive impact. Steel fundamentals remain weak, with total inventories continuing to accumulate, though at a slower pace this past week. This was primarily due to the improvement in apparent demand for both long and flat steel, which partially offset the pressure from rising supply. In particular, although rebar demand remained constrained by high temperatures, the capital rate in place at domestic construction sites has improved slightly, bolstering demand as a result. Additionally, flat steel demand continued to rise, indicating that the peak season is likely approaching. According to Mysteel's research, current order books at steel mills are healthy, and restocking sentiment remains positive in anticipation of the upcoming peak season with stronger demand. However, recent environmental restrictions have been tightened, and some construction projects in the Beijing, Tianjin, Hebei regions have been suspended. This is expected to significantly impact rebar demand, keeping inventories elevated and exerting downward pressure on prices until the parade concludes. Production from mini mills decreased slightly due to narrowing margins, as finished steel prices remained weak, while scrap prices held firm. In contrast, hot metal production rose marginally despite falling profitability, thereby supporting raw material demand during this period. Notably, the 7th round of coke price hikes has been launched, with the supply-demand balance in the coke market remaining tight. The iron ore market lacked clear direction last week, with only marginal changes in underlying fundamentals. Despite sintering restrictions in key steelmaking hubs such as Hebei province, existing sintering ore inventories combined with positive mill profits continue to support high levels of hot metal output. However, more substantial production cuts are anticipated this week, and together with abundant seaborne supply, are likely to prompt a downward correction. Production restrictions ahead of the parade are expected to dominate the market in late August. Coupled with tightening steel mill margins, these restrictions will likely place pressure on raw material prices. However, the fundamental weakness in finished steel may ease, and expectations for the peak demand season in September will offer some support. Overall, the ferrous market is expected to see frequent but narrow fluctuations in the short term. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.